traders, welcome to the TMT stock market strategy video for Wednesday, December 9th. Well, we get this pretty much the same from the previous day. We did get the gap down, which that's pretty much most of the move. And here's a 5-minute chart of SPYs, and this is where you can really kind of get an idea what type of activity that we had during the trading day. And sure enough, here's where the big move was, and we did nothing all day. So if I just bring in same thing, we had the big move, one move lower, and then we gapped down. And then we just kind of went sideways. So here was the only move you had, and like I mentioned, I like to personally sell rallies at a better area than 2 or 3 5-minute candle. That's not enough for me. So a couple of days of really doing not much of anything, just sitting around and waiting. But I want to tell you that I do see a lot of volatility starting to step in, and we could see that by pre-market movement in the European session and the Asian session. So I am looking for a little bit of continued weakness. Now the McClellan oscillator is closed yesterday at -54, so we're getting into an oversold state in the markets, but we're not there yet. If today we can get a good flush, today may put an interim low before we start to rally again. But remember, we got tax loss selling. So all of these weak stocks and all of the weak sectors, obviously commodities, industrials, they are going to be the ones that are going to be hit the hardest in the next week or so. But I think then this is where we want to start looking for buys. Crude oil, the CL contract trading at $37.83. I think you see $32, $33, and then you step in and look to buy it. A lot of these oil names, the exploration stocks, they start coming into some seasonal strength in the last 2 weeks of the year. So look at the some of them exploration stocks, some of the integrated oil and gas stocks like CVX, ConocoPhillips, Sucor Energy. Those are the ones that I'm looking at. They're on my radar. Not really right now this week. I want to see the market get a good flush and then see if we can get that so-called Santa Claus rally. Now, the markets are in trouble in the near term, and I mean near term in the next 4 to 6 weeks going into the new year. I'm going to show that to you again. We've been discussing major market divergence from the from the transports and, of course, the Russell 2000. However, the Russell 2000 does come into some seasonal strength also in the next couple of weeks. So if we get a rally in the Russell, then I think all bets are off for a major sell-off in the next 3 weeks. And usually the Russell does lead going into that Santa Claus rally, okay? So if history repeats itself and you look at the Trader's Almanac, you'll get all that information, what I'm telling you. It's there. And that's why I like to look at seasonal trends. That's really important, guys. So you have an idea of like, wow, what just happened? The Russell was weak all year. Now it's rallying. Well, it's rallying because it's coming into a seasonal strength time of the year, okay? So, but we don't know what's going to happen. Let's let the market tell us what we're trying to anticipate here, okay? So 5-minute chart, you can see we did nothing here. I wanted to show you the banks. Banks are another play that I'm going to be looking for. But remember, the big caveat here is the December 15th and 16th FOMC meeting where they decide on rate decision. Okay, it looks like that the banks are pricing in that they're not going to raise rates. It's really funny because they should be rallying right now in an interest rate environment, rising environment, but that's not the case. So I guess they were kind of skeptical, a lot of the traders that are trading banks, and they're actually selling off as well. So I'm looking at some of the bigger banks, the Citibanks, the Bank of America, the JP Morgans, definitely JP Morgan. Some of the regionals, too, you can look at. Fifth Third Bank, FTIB. That's another good stock. So they're all on my radar, and I will be definitely pointing it out to you as the weeks come on. All right, so XLF not really doing too well. And also, that's not what you want to see when you're looking for some sort of a rally here, okay? USO. If we could get oil down to $32, I think you see low 10s right in this area here. And then I think you can buy it for a bounce. But I wouldn't want you to be catching a falling knife. The crude oil is down again, and I think you're going to get a big flush into that $32, $33, and then you can buy it, okay? That's going to be for a trade, not for a buy and hold for the long term. When you're looking for a buy and hold, you want to see some base building. You want to see the, like crude oil, for instance, if it's trading at $32, $33, I want to see that trade for a couple of weeks, take out the high, and then start making series of higher highs and higher lows. That's when I like to get long. But for a trade, it was so oversold in the crude oil. I think right now, and again, since crude oil and oil stocks have been killed, that's what's getting sold off going into tax selling period, okay? So that's one of the reasons why. All right, GLD, same thing. We've gotten decimated here. in the GLD and the gold contract. I think you see 1,000 in gold. I really do. So I'm really patient with this trade, and I'm going to be patient going into the next 2 to 3 weeks. But I'm going to pick my spots where all you need is 2, 3, 4 good days, and you made your month for the month of December. So gold also I'm looking at, and a lot of these commodities at the end of the year, I have a funny feeling they're going to rally. Okay, so we want to look at that as well. All right, so right into the indexes, you can see the 50 and the 200. We're barely clinching here. I think we hit this target here today, and then I think we rally. I don't think we get any lower. I mean, here's another good spot right up in here is this area of this band of support, which was resistance. And also, you see this M formation here that we need that right shoulder. This will be the neckline here. But I don't think we get past that this year. I really don't. I think that the markets, and I think a lot of the hedge funds, money managers, they're underperforming. Obviously, they're going off the benchmark. We're down about 1 to 2% in the indexes for the year. I think they're going to be chasing performance as well as that seasonal strength time of the year, and the markets start to rally, okay? So just keep that in mind, guys. Transports, canary in the coal mine, guys. This is what I'm talking about. Now, I had shown you, usually in the beginning of the week, we always look at the weekly charts. I just want to show you where we are here in these weeklies. This is a very bad sign. We have a major head and shoulders on a weekly chart right here, and we're at the neckline now. Now, does it break down and just start to? No, it doesn't. What's going to happen is more than likely we're going to pierce the neckline, and we usually back test it. Sometimes we get back above the neckline, okay? We break the neckline. I want to see it break. I want to see it roll down maybe to the 200 and then back test, create this bear flag here, hold the neckline, and that's when you really get short for confirmation. A lot of times these head and shoulders patterns, they break down, get everybody short, and then they rally again. And that's what I don't want you guys to do, okay? Let's get a breakdown and then rally and fail, create that lower high from this previous high, and then that's when we get confirmation. And when that happens, that's going to give you confirmation that the markets are indeed ready for a big sell-off, okay? That, and you'll see the Russell do the same, because these two have been lagging the whole year. If that happens, guys, that's when we know, okay, now we're going to be switching mode to sell rallies instead of buy dips, okay? All right, now let's take a look at the daily transports. Here's the Russell 2000. Again, big symmetrical triangle. We broke. Now we kind of back tested, and I'm sure we're going to hover around here until the markets find some stability. And then I think we probably will rally with the Russell. I've seen it time and time again. People try to get short at the end of the year, and it just doesn't happen. Don't do it. Wait for the confirmation from what the markets are going to be telling us. Diamonds, you can see here, same thing, above the 20 and the 50. Lagging index, but was leading, as you can see, in October. And again, that's troublesome for me if you're looking for a big move. Lastly is the Qs. A lot of the top 10 of the Qs holdings have been pretty much holding this index up all year. Watch them, these leaders, guys. Amazon, Facebook, Google L, Apple, Microsoft, Gilead, GILD. These are the leaders of the Qs. If they start to move lower, since they've been leading all year, I think this index will be in trouble, as well as help the other indexes start to sell off, okay? Right now we haven't happened, and I don't think that's going to happen. I think we get a little push lower. Let's get the McClellan oscillator down below 60, 70, 80, and then we start looking to buy that dip, okay? Have a great day, guys. I hope it helps. Take care.